Hey, welcome back. I just want to demystify a concept that you might have heard in several places around Bitcoin power law. What is it and what purpose does it serve? So I'm just going to share you a couple of resources that I found interesting, and then I'm going to round up with a word of caution at the end. Okay, just want to give you a formal description. What is a Bitcoin power law model? It's none other than a mathematical description of Bitcoin's historical price trends, revealing a power law distribution on a log-log scale. This analysis suggests a correlation between time and price. So in short, it's very clear, right? Given that Bitcoin has been in existence since 2009, so it has this mathematical model is based out on a historical data of 15 years. And it just, as it says, predicts the distribution correlation between time and price. So that's a formal description. And then I'm going to show you just a couple of useful, interesting charts that I've found that depicts this power model in a log-log space, as it says, between time and price. So this one is from BitBo. You have the actual URL at the top of the navigator. And I think the main message, I think the only thing I found of use is the power law distribution, time and price. It confirms that the trend is none other than a linear progression, exponential, but nonetheless is always in a continual upward trend. That is the thing that I got out of the most from this power law distribution. I don't want to get myself dogged into the intricacies of how this model has been built, and leave it to your devices and how you interpret it. But as far as I can see it is that upward trend, and that gives me confidence that based on the 15-year historical data that this model is produced upon, it confirms that. It just corroborates that. Another resource that I found more interesting, again, based on the mathematical model and how it's built, you can see it gives you it's like a simulation calculator. And again, it's from bitcoincompound.com. And here it has different types of models. You can go through each one of them in terms of how it's explained. But let's go through one simple example. Let's say that a Bitcoin holder is a whole coiner and has one coin in its stack, and I select model 6. You can refer to the definitions and assume that I'm planning to withdraw part of the from the one Bitcoin that I currently hold within the next 10 years. I'm still working. I still need to hold it for a long period of time in order to generate that intergenerational wealth that I explained in one of my previous episodes. And I'm going to be planning to retire in 10 years. I'm also going to plan, so once I reach that 2034, I'm planning to take out with fixed withdrawal amounts, humble amount, let's say $50,000, but you can put it to $100,000. And this doesn't take into account all of the taxes, deductions. You can put the tax percentage deduction here if you'd like. But just to keep it simple, these are the input parameters that I put into the simulator. If I hit on calculate, and I move underneath, you can see the results. And you can see effectively you've got the CAGR, you've got the compound annual growth rate shown above. And one thing that I observed, which is it makes sense, at the beginning of its journey, and given that it's following this kind of S-curve progression, you can expect to receive a higher rate of CAGR, particularly where there's still amounts of Bitcoin to be acquired, what is left out of the 21 million that is. And then later on in the time, the volatility is expected to decrease over time as it becomes more mature and more mainstream as an asset. So that is reasonable. And you have the different types of model prices underneath top. So you can say more or less today's prices is oscillating around the 66 to 70k mark per coin. And then you have, let's say from 2034, I've specified 100,000 a year withdrawal amounts based on the future model price of $1.4 million per coin. That's the power law prediction. If I deduct 100,000 from the one coin, which is valued at 1.4 and valued on 2034, I'm expecting to end up with a principal amount of 1.26 million. So what it's done is it's taken the futuristic price prediction of the Bitcoin of the year 2034 to be 1.4 million, and it's deducting 100,000 because I'm going to use it to cover my expenses throughout the year. deduct this amount from the total amount to give me 1.2 million, and the rest of the Bitcoin left over, which is 0.92, and so on, you can see. So that is interesting, right? I'm not going to hold my life into this analysis, but it just gives you more information, right? It's an interesting read, and it gives you that a little bit of comfort that, if you manage your Bitcoin assets that you have, and you're planning to release small amounts of it over time because of the accretive factor, you have to bear in mind that as time progresses, the actual holding of the Bitcoin and the scarcity of the supply that's left is going to push up the price more and more over time. So this is a prudent approach. You take a little bit of Bitcoin that you need to cover your expenses for any given year, and let the rest kind of appreciate over time. So that is an interesting analysis, and you have the resource at the top. So I hopefully I've covered in a nutshell what is Bitcoin power law, what is it about, and just a couple of shared resources to play around with it and familiarize with it, and leave it up to you to how best to use it. So that's it for today's episode. Hopefully you found it interesting, but I just want to leave it with a word of caution, right? There's a lot of analysis, there's a lot of people posting mathematical models or methods to predict future price of Bitcoin during the course of time. This one, it really tops all of them. Even though it's interesting, it does come with a caution, right? We know from experience, past performance is never an indicator of future performance, purely because the set of assumptions that have been used to produce this model is finite and it's momentary. So please treat it with caution. Just use it as yet another great information resource, and just tread with care. Thank you.